Almost every trader misses with Heiken Ashi, and it's the reason most people don't use it. The biggest limitation is this. It doesn't show you the exact market price like traditional candlesticks do. Yup, you're basically looking at a smoothed out version of reality. Sounds cool, but here's the problem. That smoothness hides important details. Think about it. If you're trying to spot chart patterns or identify key support and resistance levels, Heiken Ashi makes it way harder. You're not seeing the real price, you're seeing a polished version. And that's why so many traders stick to normal candlesticks, because you want the real numbers, right? But wait, here's where it gets crazy. To fix this exact problem, traders came up with something new. This makes it way easier to avoid fake outs, false dips, and all those annoying whipsaws that trick beginners into losing trades. Picture this. The market looks choppy, dips are popping everywhere, and it feels like the trend might collapse. Normal candles might freak you out, but smooth Heiken Ashi? It's like shouting, "Relax! We're still in an uptrend, don't panic!" And that confidence can save you from bad decisions. So yeah, smooth Heiken Ashi gives you a crystal clear, hype-packed view of the market while keeping all the important price details right in front of you. Reliable signals, less stress, smarter trading. That's why this indicator is such a beast. And that's why I'm about to show you the 4th step strategy, how to actually use the smoothed Heiken Ashi indicator like a pro so you catch the move early, not late. Ready? This is where things get next level. Alright guys, let's break this down because this is insane. What the heck is a Heiken Ashi? Well, in Japanese it literally means average bar. Sounds boring, right? But when you actually see it in action, your brain's gonna explode. Instead of looking like normal candlesticks that jump up, down, fake out and confuse you, Heiken Ashi smooths everything out. Think of it like putting a noise cancelling filter on the market. All the random spikes, all the nasty whipsaws, boom, gone. You finally get a clean, clear picture of the real trend. Here's how it works. Instead of just closing wherever the price ends, Heiken Ashi takes the open, the high, the low, and the close, adds them together, divides by 4, and then creates a new candle. And the next candle, that one starts from the middle of the last one. It's like the chart is averaging itself in real time, creating this super smooth flow of price action that's way easier to read. And here's the cool part. The second you switch your chart to Heiken Ashi candles, everything changes. Those messy candlesticks you're used to, gone. Suddenly, the chart looks clean, simple, and you can actually see the trend. Uptrend, you'll see long stretches of green candles marching up like soldiers. Downtrend, you'll see red candles stacking down like a staircase. It's so much easier to spot what the market is actually doing without all the chaos distracting you. But listen, just knowing what Heiken Ashi is? That's step 1. The real magic happens when you learn how to actually read these candles and use them to catch winning trades. And that's exactly what I'm about to show you next. Okay guys, this part is crazy simple but insanely powerful. Heiken Ashi candles really only come in 3 main types, and once you lock these in, you'll read charts like a pro. First up, the bullish candle. Think of this as your giant green rocket ship. It's got a solid green body, a wick on top, and usually no wick at the bottom, or just a tiny little one. That's the market screaming, uptrend baby. Buyers are in full control, blasting prices higher. Next, the bearish candle, total opposite. Imagine a big red hammer smashing the market down. It's a red body, usually a long wick on the bottom, and sometimes no wick on top at all. Translation? Sellers are dominating, momentum is crashing down, and we've got ourselves a downtrend. And then the wild card, the doji candle. This one can show up as red or green, but here's the kicker. It's got a tiny body with long wicks on both sides. What does that mean? It means the market's confused. The trend is slowing, the buyers and sellers are fighting, and the price is literally pausing to decide what happens next. So those are your 3 building blocks: bullish, bearish, and doji. Understand these, and you've got the foundation to unlock the 5 insane signals that Heiken Ashi charts reveal. Are you guys ready? Alright guys, now it's time to break down the 5 key signals you need to watch for with candlesticks, and once you know these, you'll never look at a chart the same way again. Number 1, a strong uptrend. When the market's pumping, you'll see a whole string of green candles stacking up. And here's the cool part, most of these candles don't even have a lower wick. That's basically the market screaming, buyers are in total control, and if those green candles keep getting bigger, that means momentum is exploding upward. Does that mean jump in right now? Not exactly, we'll cover how to enter later. But the main point is this, if you're even thinking about selling when momentum looks this strong, don't do it. Buyers are running the show. Number 2, a weakening uptrend. This is when things start to shift. Instead of big green monsters, you'll notice candles getting smaller, and sometimes you'll even spot little lower wicks forming. That's a red flag. It means the buyers are losing steam. So what do you do here? If you already bought earlier, this might be the moment to be cautious. The trend could pause, retrace, or even reverse. If you haven't entered yet, this is definitely not the time to jump in. You wait, you chill, you let the market show its next move. Number 3, a sideways trend. After a strong move up or down, the market sometimes just pauses. You'll see a cluster of doji candles popping up, those tiny bodies with long wicks we talked about earlier. One doji by itself means momentum is fading. But a whole group of dojis? That's the market basically saying, I can't decide where to go. No clear direction, no big money to be made yet. So the smart move, sit on your hands and wait for a breakout. Number 4, a strong downtrend. This one's the mirror opposite of a strong uptrend. You'll see red candles lining up, big solid bodies, no upper wicks, only lower wicks. That's sellers dominating the market, shoving prices lower and lower. And if those red candles are growing in size, that's your sign that momentum is fierce. Translation? This is sell territory. You do not want to buy into this. Number 5, a weak downtrend. Just like before, this is where the sellers start losing gas. You'll notice the red candles getting smaller, and here's the giveaway. Upper wicks start showing up where normally they wouldn't. That's sellers running out of firepower. The market could pause, retrace, or flip back into a reversal. So if you're thinking, oh, I'll short here, don't. You'd be trading against weakening momentum. And boom, that's the 5 candlestick signals you've got to master. Strong uptrend, weak uptrend, sideways, strong downtrend, weak downtrend. Once you can read these like second nature, the market starts making sense in a way most traders never experience. And trust me, this is where trading gets exciting. Okay, here's the deal. Most traders are messing this up and they don't even realize it. Heiken Ashi has 2 types of candles, the classic and the smoothed. But guess what? Almost everyone only uses the classic, and that's why they keep getting confused. But not us. We're going way deeper. So check this out. Heiken Ashi isn't just some fancy name. It's a candlestick technique that smooths out the price action. Imagine looking at a normal candlestick chart, wicks flying everywhere, price jumping up and down, total chaos. Your brain's like, wait, is this going up? Or is it crashing down? That's what we call market noise. And it fakes traders out all the time. Now here's where Heiken Ashi comes in. Boom! It cleans up the chart. Instead of messy green and red candles flipping back and forth, you get smooth, consistent candles that make the trend easy to see. No more guessing. If the trend is up, you'll see a row of clean, bullish candles. If it's down, boom, red after red after red. It's like trading with night vision goggles. Suddenly everything makes sense. But hold up. Just like every tool in trading, Heiken Ashi has a catch. The classic version smooths things so much that you actually lose some real details, like the exact price or key patterns. That's the trade-off, and that's exactly why most people use it wrong. Alright, here's the catch that almost every trader misses with Heiken Ashi, and it's the reason most people don't use it. The biggest limitation is this. It doesn't show you the exact market price like traditional candlesticks do. Yup, you're basically looking at a smoothed out version of reality. Sounds cool, but here's the problem. That smoothness hides important details. Think about it. If you're trying to spot chart patterns or identify key support and resistance levels, Heiken Ashi makes it way harder. You're not seeing the real price, you're seeing a polished version. And that's why so many traders stick to normal candlesticks, because you want the real numbers, right? But wait, here's where it gets crazy. To fix this exact problem, traders came up with something new, the smoothed Heiken Ashi. And this is a total game changer. Instead of replacing your normal candlestick chart, it overlays on top of it. That means you keep your real candlesticks and you get the smooth trend together at the same time. Double vision, but better. So what does this mean for you? Boom. You get the best of both worlds. You can still see the raw market price, but now you also see the clean trend direction with all the noise filtered out. This makes it way easier to avoid fake outs, false dips, and all those annoying whipsaws that trick beginners into losing trades. Picture this. The market looks choppy, dips are popping everywhere, and it feels like the trend might collapse. Normal candles might freak you out, but smooth Heiken Ashi? It's like shouting, relax! We're still in an uptrend, don't panic. And that confidence can save you from bad decisions. So yeah, smooth Heiken Ashi gives you a crystal clear, hype-packed view of the market while keeping all the important price details right in front of you. Reliable signals, less stress, smarter trading. That's why this indicator is such a beast. Green candles equals up, red candles is down. Simple, right? But here's where it gets crazy. These colours don't just tell you what's happening now, they can actually warn you when the trend might flip. Check this out. If the chart suddenly shifts from green to red, boom, that could mean the uptrend is done and a downtrend is starting. And if it goes from red to green, you might be staring at the beginning of a brand new uptrend. That's huge. But wait, we're not stopping at colours. Size matters too. If the green candles keep getting bigger and bigger, that's like the buyers yelling, we're taking over. Momentum is exploding. But if the candles shrink, it's like the market is running out of gas, and that's your first clue the trend could be slowing down. Now imagine this, you're watching red candles, they keep getting smaller and smaller, and suddenly, boom, the next candle flips green. That's your signal the downtrend is losing steam and an uptrend is about to fire up. That's how traders catch reversals before everyone else sees them. So when you put this together, colour plus size, you're basically reading the market's mood in real time. It's like having X-ray vision on price action, spotting momentum shifts before they smack you in the face. Listen up, because this part is crucial. Just because a candle flips from red to green doesn't mean you should instantly YOLO into a buy trade. And the same goes for green to red. You don't just slam a sell button because of one colour change. That's how beginners get wrecked. Here's the deal. If you only rely on the colour switch, you're going to enter late, and by the time you jump in, the big move already happened. That means you're catching the leftovers instead of the main feast, and nobody wants that. Let me show you. Look at this chart. We've got a strong downtrend. Giant red Heiken Ashi candles stacked one-half screams. The sellers are in total control. But then something changes. Those red candles start shrinking. That's your first clue momentum is dying out. And finally, bam! It flips green. Sounds like reversal, right? But here's the catch. By the time that green candle shows up, price is already blasted upward. If you buy there, you miss the rocket launch and you're just chasing smoke trails. So the lesson? Don't get fooled by just the colour. Green or red is powerful, but timing is everything. And that's why I'm about to show you the 4th step strategy, how to actually use the smoothed Heiken Ashi indicator like a pro so you catch the move early, not late. Ready? This is where things get next level. Step 1, pay attention. You gotta spot a super clear trend. Right here, boom, price is crashing down and the indicator is spitting out massive red candles. That's your proof. Sellers are in full control. This is a strong downtrend. Step 2, once you know the trend, don't just sit there, look for the very first sign of a reversal. How? Watch those candles shrink smaller and smaller until bam, they flip green. That's your signal the trend might be changing. But wait, don't buy yet. That's a rookie trap because if you enter here, guess what? You're already late. The move already happened and you'll be chasing scraps instead of catching the feast. Step 3, here's the smart play. Wait for the price to pull back to the indicator. This is where the magic happens because now that indicator is acting like your personal support and resistance zone. Price comes back down to test it, and that's when we prepare for the big move. Step 4, the game changer. We need confirmation, something that screams, yes, the trend is ready to explode upward. So what do we look for? Boom! We spot a big green engulfing candle. That's the double confirmation, rejection plus engulfing, and together they scream, momentum is back up. That's our entry. We smashed buy right there. Where's the stop loss? Easy. Just tuck it below the swing low, right under that wick. Where's the target? Aim for the next big rejection level on the same time frame. Super clean. And the best part, using this method, you're not gambling. You're catching pullbacks with precision, stacking the odds in your favour. You'll know when a trend has actually changed and you'll enter at the exact moment momentum confirms it. High probability trades, laser sharp entries, this is how pros do it. Okay guys, let's wrap this up like absolute beasts. So here's what we just conquered. Heiken Ashi isn't just some fancy name, it's literally your X-ray vision for the market. Why? Because it smooths out all the messy noise that regular candlesticks throw at you. Instead of chaos, you see the trend crystal clear, like turning static into HD. Now remember, we broke it down into three big things. Green candles, bullish, the market's pushing up. Red candles, bearish, the market's sliding down. And the doji candles? Those little guys scream indecision and sometimes signal a potential reversal. That's your clue the game might flip. But we didn't stop there. We covered the 5 trend signals. Strong uptrend, strong downtrend, weak uptrend, weak downtrend, and of course, sideways chop. Each one gives you a read on how powerful the market move actually is. Then I dropped the big secret, classic versus smoothed Heiken Ashi, and guess what? The smoothed version is usually more reliable because it filters out even more noise while still letting you use your normal candlestick chart alongside it. That means cleaner decisions, less confusion, and listen carefully. Don't ever be that trader who jumps in just because the candle changed colour. That's a rookie mistake. If you buy the second it flips green, you're usually late and the move already happened. Instead, we use my 4-step pullback and confirmation method, so you only enter when the odds are stacked in your favour. That's how you trade smart, not desperate. So thank you for sticking with me. If you got value today, smash that like button. It seriously helps this channel grow and keeps us making more epic content every single week. And if you're new here, subscribe right now and hit the notification bell so you don't miss the next strategy drop. Oh, and bonus, if you want the exact Heiken Ashi and smoothed Heiken Ashi indicators we talked about, I've already hooked you up. The download link is sitting right there in the description. Grab it, plug it into your platform and start trading like a pro today. Alright, that's it for now. You guys are legends. Thank you for watching and I'll see you in the next video.